Hello everyone. Last night Infosys ADR was down near 5% and Wipro ADR was down near 4%. So in this video, let's look at that first, like why, and then we'll look at our regular pre-market report for today, 11th July 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Indian IT ADRs were down all as a reaction to the TCS quarterly results. If required, please pause and have a look. This is the quarterly results direct comparison to the Bloomberg earnings estimation which we discussed yesterday. So basically market expecting all like revenue, EBIT margin and net profit to increase between 0.5 to 1.5%. But unfortunately revenue was down by 1.6% and EBIT was down by 1%, which is bit of the missed estimation. On the other hand, EBIT margin improved more than analyst estimation and net profit increased over 4%, which is good, and in these metric results beats the estimation. So overall the earnings is kind of mixed bag. But the problem is in other two metric and the statement from management. Yesterday we discussed this. In the last quarter, TCS had the order book of $12.2 billion worth, and for this quarter, market expected the same order book value. Unfortunately, for the June quarter, they got the order book of only $9.4 billion, which is a massive 23% reduction. Regarding the reason, as per NDTV Profit, TCS said that they got the orders in pipeline has been either deferred or paused as clients have become more cautious with spending. Couple of weeks ago, similar statement was made by Accenture as well. Their order pipeline is healthy, but the closures are taking longer, which market haven't liked it at all. Then the another major problem was the attrition rate, which increased to 2-year high value 13.8%. Hence, not because of the results, but market didn't like the low order book and the poor attrition rate. As a consequence, both the Indian IT stocks ADR closed substantially negative. Anyway, moving on, coming to US market, yesterday early morning, Taiwan Semiconductor Manufacturing said that their quarterly sales was jumped by 40%, which is more than what analysts were expecting. And they said the revenue increase was due to the demand of AI chipset. Hence, in the US market last night, all the AI-related companies increased. However, there are some cautiousness and nervousness in the market as Trump placed 50% tariff on Brazil as Brazil president vowed for a proportionate response. Meaning now it looks like Brazil and US is going to have the trade war. So US market managed to close on the positive note but with nervousness. Dow Jones was up by 0.43%, S&P 500 was increased 0.27% and Nasdaq was the least up only by 0.09%. Then in case of VIX didn't change much, still slightly below 16. About oil, because of the Trump tariff demand concern, oil price fell by 1.5%. At the time of this video, WTI crude trading near $67 per barrel and Brent crude trading at $69 per barrel. Regarding Indian ADR, as we discussed earlier, both the IT stocks crashed, and even if we calculate the arbitrage, then also both the IT stocks indicating fresh negative of 4 to 6% difference. Then moving to the banking stocks, in the US market, indeed both the banks closed negative, but because in Indian market also it was negative yesterday, so arbitrage difference showing no any new fresh negative. And the same statement is applicable for Reliance Industries as well. In case of GIFT Nifty, early morning it dropped and traded at 25,336 mark, equating that with the spot market. For now, it's indicating gap down opening of around 60 points. Those were the things happened on the dollar market. Now moving to Indian market related info, and if you see the participant wise open interest in the option market overall, because of weekly expiry day, near 40% of call option open interest and 35% of put option open interest either unwound or expired, which is a reasonable unwound for the options expiry. So no any red flag from the volume perspective. Then, based on the remaining approximate 60% open interest, all the participants increased their respective stance like crazy. First about retail traders, they increased their net 5.7% open interest to massive 10.3% open interest on the positive side. On the other hand, from around net 2.5% open interest on the bearish side, proprietary traders increased their stance to net 5.1% open interest on the bearish side, and FII increased it to 4.4% open interest on the bearish side. So clearly, based on the existing index option open interest, FII and proprietary traders was strong negative and the retail traders position was super positive. Coming to index future, we don't need to worry too much as we got some time. Either way, if required, please pause and have a look. Then about institution in the cash market, for the second session in a row, both FII and DII were net buyers, but for minor quantities. FII net bought for 220 crore rupees and DII net bought for near 600 crore rupees. As a summary, US market closed positive. However, there are some nervousness as the result of Trump's aggressive tariff. In addition, clearly IT stocks won't be favorable today. So for now, GIFT Nifty indicating the gap down opening. However, some strong stance from positive arbitrage of banking ADR is kind of comforting info. Moving on, from the stock wise open interest, 361, KFin Tech, LIC, Infosys, Solar Industries and BSE are some of the 75 stocks that got an increase in open interest along with a decrease in price, indicating the short build-up. On the other hand, Glenmark Pharma, Mankind Pharma, Max Health, PFC, JSW Energy, Apollo Hospital and IREDA are some of the 27 stocks that got an increase in open interest as well as increase in price. Hence, these stocks indicating the long build-up. About the things to look out, Avenue Supermarket and Aditya Birla Money are some of the major Indian companies' earnings results are still released today. Then macro-wise, first during our market hours at 11:30 am, UK GDP data and industrial production growth data is due. Then after our market close, Indian Bank's bi-weekly credit and deposit growth rate is scheduled to release. And in the night for US, Fed budget balance are some of the important items we need to keep an eye out today. Coming technical, Nifty opened around 30 points positive. However, throughout the session, it continued to slide and closed below 25,400 mark but above 25,350 mark. Thus, on the daily chart, Nifty formed a long bearish candle with lower high and lower low formation, which is not good. In addition, Nifty fell below the 5 and 10 day both simple and exponential moving average, and some of the momentum indicators got the negative crossover, which all showing the bias waning strength. So next, the immediate support is at 25,200 to 25,300 zone, which coincides with the middle line of the Bollinger Band and 20-day exponential moving average. Then on the higher side, in the last 10 trading session consolidation, Nifty attempted multiple times to break out and move above 25,700 zone. But it could not able to. So that zone 25,600 to 25,700 is the immediate resistance. Then in case of Bank Nifty, it had the similar price action as Nifty, opened positive but continued to slide throughout the session and closed below the psychological 57,000 mark. Thus on the daily chart, it also formed the long bearish candle. However, still it formed the higher high formation. On the other hand, it also fell below 5 and 10 day both simple and exponential moving average, and furthermore RSI value dropped below 60. So the 20-day exponential moving average area 56,500 to 56,700 zone expect to act as the immediate support. On the other hand, to revive the positive sentiment, Bank Nifty has to move above 57,300 to 57,400 zone. As per the weekly options data, the maximum call option open interest was at 25,500 strike, followed by 26,000 and 25,600, with maximum new call option rating at 25,500 strike, and then 25,400 and 25,600. On the put side, the maximum open interest was at 25,500 strike, followed by 25,000 and 25,400, with maximum new put option rating at 25,100 strike, and then 25,400 and 25,000. Thus, from options data, it's indicating immediate resistance is at 25,500 to 25,600 zone, and the immediate support is at 25,200 to 25,300 range. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.